Welcome back. Well, as promised, let's get some fundamental analysis going on the stocks that we listed out for you. To help us out, we have Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning and good to see you in as always. Dipan, I wanted your view on PB Fintech. There's that report that we had put out actually exclusively that they're looking to enter the healthcare sector. Last couple of days, the stock appeared rather nervous. I think it's down close to around 10% odd. What's your view on this? Sometimes in a bull market, you get away with these diversifications. Sometimes, the management's clarification that it's complementary in some way, you get away with it. But sometimes the market doesn't like it. They want you to stick to the core business. Your view on the stock?
Yeah, good morning, Nigel, and thank you for having me on your show. I think that they will spell out the strategy going forward. And PB Fintech and all these new age, new generation companies are heavily influenced by institutional investors, private equity investors who have invested and are presently invested in these companies. So they take a lot of strategic direction from their shareholders, considering that always the management holdings on the lower side. So I'm sure there's a coherent strategy behind this move to get into healthcare, and they will perhaps explain it over time. I'm sure it will not be earnings dilutive, nor will it impact the return ratios. But there's no denying the fact that the company is going from strength to strength. And on the whole, this entire insurance distribution business and the loan distribution business has got good traction. And I think that PB Fintech also will get solid into profit over the next 2-3 years or so.
So, Dipan, just to press the point, you won't be concerned, two things. One is that it's a platform company. And now, if it indeed gets into setting up its own hospitals, then, that's a capital intensive business. That's one. And second, at a more sort of, academic level, many a times, most of the times, in fact, running a hospital and running an insurance company are two very different businesses at odds with each other. The hospital owner will always want to charge more, and the insurer will always want to ensure that you pay as less as possible or as efficient as possible. So, thematically, aren't they very different businesses?
Yeah, and actually, PB Fintech is not an insurance company. So it's like an insurance.
Exactly. It's in the middle. It's been the bridge, but now I don't know. This is a whole new thought process here.
Well, all I can say, Surabhi, is I can trust you to get the management on your channel and quiz them, as you always do. I'm looking forward to that interview. All I can say is that knowing the profile of the company and the management, they will not make any strategic move so sharp which will affect creation. I think a company like PB Fintech, Zomato, Paytm, they're very focused on creating value for minority shareholders, and they will not do anything to dilute that particular strategy.
No, absolutely. Got that. Just a quick word, Dipan, these big IPOs which are coming up, right? Hyundai is the big one, planning to raise $3 billion. What's your sense? Have you given it a look? Should one start to put some money aside when it comes? I think about 16-17% share of the market in terms of total volume of cars sold in India. Maruti is at about 45%. Go on.
Yeah, Prashant, good morning. Yeah, absolutely. I think that Hyundai will be a very successful IPO, and post-listing also a lot of investors, retail and institutional will line up to include in their portfolio. And I think that their strategy, their models, especially the EV strategy seems to be better than even Maruti. And look, the automobile industry has been a good value creator. There are very few listed stocks, and now Hyundai also will join on the four-wheeler side. So very positive, and typically MNC companies have a fancy on Indian stock markets, and I don't think this one will, not meet that bar as well. So looking forward to the IPO of Hyundai, and I think this Diwali we're going to have a blockbuster IPO Diwali. Almost 50,000 crores worth of IPOs coming in. I think this NTPC Green also is one if valuations are attractive. And there is Swiggy also, which is coming through. So I think that investors have to keep some money aside to look for applying for these IPOs. And any allotment, I think, will be like an absolute lottery, as we have seen in Bajaj Housing.
A point taken, Dipan. So there are people who are worried about a lot of the supply coming. But I think you're not in that camp really, right? There's enough demand, and that's kind of creating its own supply as well. And some high quality paper, as you said. And Manish is not worried. Dipan, you're not worried either, right? That's what I could take away. I hope you heard the soundbite. Manish's view is we should do $50 billion. Not just IPOs, QIPs, etc. We're already, I think, in the ballpark. But your sense?
See, Prashant, all we can analyze is the fundamentals of the company and the economy and the industry. How much of supply will come and what the demand is are beyond our estimate. You just cannot estimate or put a number on these things. And more supply creates, attracts more supply, and more demand also creates more demand. That's the unique thing about capital markets. Higher the price, higher the demand, lower the price, lower the demand. That's a unique feature of capital markets. And what we are seeing is like a once in a generation transfer of wealth from other asset classes into equity. And at the same time, there's adequate supply also coming through. At the same time, there's a lot of froth also in a few names within the market. So we are in a classic bull market. And really, I cannot make out a case where even our 10% up of a correction can take place. I think bad news is being used to buy even more. And how much money on the sidelines also is difficult to say. But I would say that the only warning sign I'm looking out for is a failure of a good quality IPO when it starts to list or it doesn't get subscribed or it lists below its market price. That perhaps would put a kind of an end to this phase of the bull market, but I don't see that happening in the near future.
All right, Dipan, I wanted to ask you about the other large trade that we're looking forward to today, which is on 5-star. My colleague Vivek yesterday gave us a heads up that that's a possibility. And sometimes, the stock price seems to be range bound till this large trade gets out of the way. Now, there'll be a cooling off period for the next many months, so that you won't get additional supply coming in from those entities. What's your view on the company? I'm looking at a DAM Capital note today, and they're saying on a price to book, 5-star and SPFC, they trade at similar multiples. But on a PE, there's a sharp discount. And the return ratios actually are better for 5-star in comparison to SPFC. Your view?
I think a lot of NBFCs are trading at attractive valuations. A lot of banks also are trading at attractive valuations. But the thing is that we have very high ownership in the bank NBFC space across portfolios, not just with us, but I can see with even a lot of other investors. And that's keeping the valuations pinned down. But at some point of time, as we are seeing rotation in leadership, rotation of money moving into different sectors, something similar will play out also with banks and NBFCs. And that's one pocket where valuations are still reasonable as compared to growth rates. And still it's kind of decent environment for them. So very positive on a company like this and, providing an exit opportunity for investors. I would say that, new investors will come in and who will perhaps, support the management and take the company to greater heights. So very positive on banks, NBFCs, and 5-star also in general.
All right, Dipan, got that. So that's banks and NBFCs, which are in focus at this point in time. Just a quick word on autos as well, the already listed ones, not the new ones which will come. Mahindra and Mahindra. I think stock's done very well. Last 3-4 days I'm talking about. Friday was a big day. Monday was a pretty good rally. And by the way, the optimism is not coming from the passenger vehicle segment. It's coming from tractors. Escorts, for example, has had a decent run recently. Dipan, do you like anything here?
See, Prashant, the tractors operating profit margins in M&M are higher than the passenger vehicle and the utility vehicle. So if the tractor business starts to do well for them, then it could give a big leg up to M&M's profitability. And stock, of course, has run up in the last few months or so, years as well. The new models have been very well received and they have a dominant position in the tractor industry. So I would prefer to remain overweight on M&M as compared to a lot of other automobile companies where we are seeing that, sales are starting to stagnate and they're looking forward to the festival season to reduce the inventory which is there with the dealers.
Dipan, briefly when we spoke about IPOs, you mentioned about Bajaj Housing. As someone who didn't get it, they'll be quite depressed when they saw the stock go all the way to around 190. Now it's come to around 150. Get in or wait buy?
No, I think it's still expensive at 150 also. Maybe let's look at a couple of quarters or so. And once the price to earning multiple is a little narrow, that may be a good entry point. I think at 150 also it is going at 80 times or something like that, if I'm not mistaken. So I'll just wait for reasonable valuations.
Okay, all right. Dipan, stay on. We'll come back to you and get some more thoughts going. For the time being, I think we have to take a very quick break. Come back to Dipan for a couple of questions as well. Deepan, let's talk about metals, and within that, let's talk about one stock, which is Vedanta. Nigel just told us that the company is going to be considering the fourth dividend so far this year, right? And I don't know, it's probably a good thing because the promoter is also, in need of that money, and they're doing more and more dividends. So as a minority shareholder, it doesn't hurt. But the bigger question is that there is a bit of a, uplift in general on the metals pack, considering what's going on in China. So would you buy metals, and within that, would you look at Vedanta or something else?
Dipan, before you answer that, I just want to make one more point. At the start of this year, if you bought Vedanta, you would get it around 270 rupees. All right, you got the stock at 270. Forget about the appreciation of the stock.
The dividend.
You've already got 35 bucks back of dividend. So effectively, you've got close to around 15% return via dividend itself. But it's not the one for the faint-hearted. You don't know what Mr. Agarwal wants to do next. It's the best placed stock, I would say, with regard to this commodity cycle post that QIP that they did. But Dipan, at 485 rupees, how much of the good news is in the price? I have a very split verdict out here. Some part of the sell side under say, it's a touch me not stock. The other one says, it can't be a better play than this. Your take?
Yeah, well, I think that I'm also as confused what rating to give for Vedanta. But on one hand, definitely, I think the entire group is gradually going towards safety, and some of the concerns which are there about debt at the holding company level are getting allayed slowly. So that's a good trend. But I'm not a great fan of commodity stocks, as Nigel knows very well. And there could be a lot of cycles over here. Earnings volatility also takes place. So from that point of view, I don't think it is really at that attractive valuation at that typical 8-9 times PE multiple, where you can buy with limited downside and great deal of margin of safety. And look, the world is getting into very complex space where you have interest rate cuts because the economy is slowing down in some parts of the world, and then China is stimulating. And which way, at end of the day, the commodity prices move is very difficult to say. So just best to stay away from commodities, in my opinion. That strategy has worked well. There are so many other ideas one can pursue. So I would just prefer to wait and watch as far as commodity stocks are concerned.
Okay, all right, got it. So wait and watch on some of the commodity names like Vedanta. Got it, Deepan. Let's move on to